Imagine waking up and realizing that the money in your bank account is losing value by the hour. The gas station down the street just hiked prices for the third time today, and your local grocery store shelves are looking suspiciously thin. This isn't a scene from a post-apocalyptic movie. For many experts, this is the blueprint for 2026. For years, we've been told the economy is resilient. But beneath the surface, the structural pillars of our global financial system are beginning to crack. We are currently navigating a perfect storm of record-breaking debt, an artificial intelligence bubble that looks ready to burst, and a geopolitical landscape that is more fractured than at any point since the Cold War. Think about the debt for a moment. Governments around the world have been printing money at a rate that defies logic, assuming that growth would eventually catch up. But in 2026, the bill comes due. Interest rates, while fluctuating, remain high enough to make servicing that debt a nightmare for major nations. When a government spends more on interest than on its own military or infrastructure, you aren't looking at a recession, you're looking at a systemic failure. This debt trap is tightening, and the first to feel the squeeze won't be the billionaire bankers, but the average family trying to pay a mortgage. Then there is the tech sector. We've poured trillions into the promise of artificial intelligence, betting that it would spark a new industrial revolution. But what happens when the massive investments in hardware and data centers fail to produce the immediate profits Wall Street demands? In 2026, many analysts predict an AI winter. If the tech giants, the companies holding up the entire S&P 500, begin to stumble, the resulting market crash could wipe out trillions in household wealth in a matter of weeks. This isn't just about stocks. It's about the pensions and 401ks of millions of people who thought their retirement was safe. Beyond the numbers, we have to look at the map. The era of globalization is ending. Trade wars that started as political posturing have evolved into full-blown economic blockades. As the world splits into competing factions, the seamless flow of cheap goods we've relied on for 30 years is stopping. This fragmentation means higher prices for everything from your smartphone to your morning coffee. We are moving toward a world of fortress economies, where every country is out for itself, and the global cooperation that saved us in 2008 is nowhere to be found. The most terrifying part is the doom loop of consumer sentiment. When people stop believing in the system stops working. We are seeing a historic gap between the official numbers and the real struggle on the streets. As labor markets soften and automation begins to replace middle-class jobs, the spending power of the global consumer, the very engine of the economy, is dying. If the engine stops, the whole plane goes down. The year 2026 isn't just another date on the calendar. It is the point where these three massive waves, debt, tech, disillusionment, and trade wars, all crash at once. The question is no longer if it will happen, but whether you are prepared for what comes after the break. Don't forget to like this video and subscribe to our YouTube channel.